Welcome back. The eye remains on that 25,000 milestone. And not to forget, Asia is also on a very strong footing. Nikkei is up 2.5%. Hang Seng is up 1.8%. But even as we count down, let's invite EPACK Durables. They reported their numbers last week. Good set of numbers. Very, very strong. 77% jump in the company's revenues. EBITDA too has seen a 76% increase on a year-on-year basis. Ajay Singhania joins in to talk more about the numbers. Ajay, morning. This is Rima here. Thank you very much for joining in. It's been a very, very strong quarter. And I remember in the last conversation, you spoke about how, last year Q1 was weak. So AC makers were sitting on a lot of inventory, which got cleared out from Q2 to Q4. And Q1 is when you see fresh demand production, manufacturing kicking in. So that's played out. But can you sustain this kind of growth over the subsequent, 3 quarters of this year? What is the visibility that you have? And can you give some numbers in terms of a guidance?
Sure. Thanks, Rima. I mean, definitely this has been an excellent quarter for the industry, and we've grown like 77%. And in terms of sustainability, yes, not only just next 3 quarters, we see a definite good growth in the market for the next 4 to 5 years. Definitely, the market is poised. Currently, the brands are sitting on extremely low inventory. So definitely, this momentum is going to continue over next 3 to 4 quarters, and beyond that, next 3 to 4 years for sure. I don't need to repeat, but the level of penetration we have in the country for air conditions. So, I mean, this is just the beginning of it. We see excellent growth and demand, not only for air conditioners, but also the coming season looks to be very good for the small domestic appliances as well, the other business we are into. So, I mean, overall, yes, all the appliances are set to grow definitely on a good scale numbers this year.
You had forayed into new product categories like air coolers, etc., which you all started in January. Has that contributed, and what would the number be?
Yeah, so this being the first year, definitely we are in a stabilization phase. So we have done pretty good in Q1 because it was the first quarter we did good numbers. And then we are now adding newer customers, newer products for air coolers, as well as we are very excited to announce that our washing machine is on track. And Q3 is when we will see our washing machine in the market. So even on that front, we are very excited that it will give us good numbers, and we will see very good growth even in these the large home appliances we are entering into. So altogether, our strategy of growth, exceeding the market growth for AC, and then the diversification of product portfolio for air coolers and then washing machines, we are on track to achieve the numbers we have in mind.
Mr. Singhania, do you see any scope to push margins forward? I mean, obviously the top line growth has been very, very robust. You're around 6.5–7% margin. Now, depending on the customers you're dealing with and all the, the product portfolio you're looking at even beyond ACs, what should we expect on the margin profile, say, over a 1-year basis?
See, the overall EBITDA margins we achieved last year was close to 8.12%. And that's the kind of guidance we have, that we continue to maintain that at least 8% is the bare minimum we'll maintain for sure for this year and beyond. And then there is definitely room to expand with the kind of diversification we are looking at. So the product mix definitely will help us further boost our metal margin beyond 8%. But for 1 year, let's say, maintaining at 8% definitely is something we aspire to, because last quarter there were some challenges in commodities which went up, which is going to now settle down, and then the impact is also getting passed on in this quarter and onwards. So there will be recovery on the margin front.
And in terms of product mix beyond ACs, which are the other products which typically fetch you higher margin where you're trying to grow?
See, the small domestic appliances definitely fetches us comparatively better margins, but then because of the ticket size, the impact obviously does not get reflected substantially in the balance sheet. But now that larger appliances we are getting into, like the coolers and washing machines, especially washing machine, we're entering with the fully automatic, which is a big ticket size product. And then we are looking at expanding the portfolio for the washing machines as well. So we have a complete lineup to begin with the fully automatic, and then semi-automatic, and then even going forward the front load. So that entire lineup, once it's rolled out, we will see the margin profile getting changed comparatively better.
Ajay, short conversation today, but we have so many earnings to pour over, and markets too are on a high. So thank you very much for joining in. We'll get into a break. We'll come back with more.